Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the sterling versus US dollar. What are the risks? What are the targets? What is the bias? Things like that. Let's get started. First off, let's talk about the bias. What is the bias in this currency pair? And to define the bias, we utilize different technical tools. For instance, the 100-hour moving average right here that was moving to the upside and staying above it would give the traders a little bit more confidence. We also use this swing area right through here where we had a number of different swing lows and swing highs that help to define a bias either bullish above or bearish below. More specifically in trading last week, the market held resistance, broke above, came down, held support in that area, and then on Friday we came down, rotated into the swing area right through here. In trading here today in the Asian session, we moved below this swing area and also moved below the 100-hour moving average. So guess what? The bias is to the downside for this sterling versus US dollar below those levels, or at least it tilts that way. And then we continued that bias shift by eventually getting below the 200-hour moving average. Admittedly, we traded above and below through here when the market started to use this area as a support type target. And you can see in trading here today, the market came down to the low of that area and then bounced up and then traded above and below the 200-hour moving average. And in the last few hours, we're seeing a rotation further to the downside, creating new lows for the pair and trading here today. So the bias is to the downside. What is the risk right now? Well, the closest risk that we have is probably this 200-hour moving average. This 200-hour moving average currently comes in at 123.989. Let's call it 124. Stay below the 124 level, folks. Here in trading here today, the bias remains to the downside. We can look for further downside momentum. Where would that take us? Well, we'd have to look toward the swing lows that we saw in trading last week, and also going back to the low that we saw through here, 123.072. You see this blue line way down here at 123.016 and moving higher on a daily basis. That's going to be close to the low price here in a day or two, and that number represents the 100-day moving average, a key level that if the market were to move below going forward, it would increase the bias to the downside even more. But right now, the sellers are in control below the 200-hour moving average. Use that level as a risk-defining level for traders looking for lower levels. If you're a buyer, what do you want to see? You want to see the price eventually move above that 200-hour moving average. That would tilt the bias a little bit more to the upside and have traders looking toward the 100-hour moving average. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.